We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by James Bracken, CEO of Fortitude Re. So we're here in Monte Carlo for the Reinsurance Rendezvous. You guys have got a slightly different take on the reinsurance industry from some of the other people we've been talking to. How's it looking for you?
Well, it's great to be back here, Richard. It's really good to see people that you haven't seen for a long time, and certainly the atmosphere for the legacy players is one that's positive, and we're looking forward to the future. Legacy is a different beast to many of the other players out here. We're focused on older liabilities and expired risk, mainly on the casualty side. And we're looking to deploy large amounts of capital on deals that can help companies transform their businesses. And so I think we've got a meaningful part to play in this industry, and I think we're well positioned to participate.
A lot of talk about a hardening market across a lot of lines of business. Obviously, that presents some opportunities for legacy players like you. What sort of deals are there in the pipeline?
Yeah, I think legacy has historically been focused on discontinued lines of business where people are looking to shed problem blocks, hand over claim administration. We've got whilst we do that, we have an interest in providing capital relief to players. And I think in this market, as insurers seek opportunity to deploy capital into more higher returning businesses, they can look to us to provide capital on their back books, allowing them to free up capital and write more profitable business going forward. So I think there could be a real symbiotic relationship between primary insurers who are looking to grow and write new risks, and legacy insurers who are looking to take over old liabilities, manage them through the life cycle, and optimize everyone's returns.
So with the legacy business, clearly managing assets is an important part of that. It's a challenging environment out there in the asset management sector. How is it shaping up for you?
So we have a partnership with Carlyle, the private equity company. They are our preferred supplier for PE alternatives, and they are one of many suppliers of illiquid credit, which provide illiquidity premium that support liabilities. So I think we're well placed to originate the right types of assets, longer dated assets to back liabilities and ensure policyholders get paid.
And in terms of the capital that's provided to the industry, obviously there are discussions about the amount of investor appetite for insurance risk. How does that play out for you guys?
Our investors are generally patient, long-term investors in the insurance industry. They want to take reserve risk. Well, our investors want to take reserve risk and see that reserve risk be managed appropriately over the next 20 or 30 years. So they want risk that's diversifying to traditional financial market risk, and our reserve risk can clearly provide that. So we just re-upped our capital base by $2 billion in April, and we're sat here with money to deploy.
Where do you see the opportunities?
I think it's across the board. So whilst we're Bermuda based and the US is clearly a large market, the P&C industry is global, and we like diversified lines of business. And so companies that have their reserve base is spread globally is something that we're interested in. So it's those whole account, large blocks of business with the larger insurers that are of the most interest.
James, thank you very much indeed.
All right, great, thanks.
For AM Best TV, I'm Richard Banks.